Hi! Long time no see.
I know. Hi everyone, I'm Lou and I create workwear and everyday clothing content over on Instagram and TikTok. I have just opened a Stocks and Shares ISA and I'm here to ask Abby some finance questions. Hi Abby.
Hi Lou. Right, tell me your first question.
So I've recently opened a Stocks and Shares ISA and I have started investing in a few things, but honestly, I just don't really know where to start.
The one thing I would say is you need to tell me what you're interested in. Okay. So let's start there.
So obviously, as you know, I create workwear and everyday clothing content over on TikTok and Instagram. So my preferences would be kind of something in the consumer sector, that sort of thing.
Okay, so fashion in particular. Yes. So you can have specific ETFs that have fashion brands included. So for instance, like global index funds have Lululemon, they have LVMH, so brands that you know and you would be interested in. And I would always say, when it comes to investing, invest in things that you are interested in because it will keep you coming back to learn more and engage more in your investing portfolio. So that's where I would start. But what else were you considering on top of fashion as well?
So I think it's the case for most people now, but I also, as well as being interested in fashion and consumer, I'm also interested in being sustainable and investing in eco-friendly companies. Is that a thing?
It is definitely a thing. So you can align yourself with companies that are driving change for climate, obviously eradicating climate change. You can look for specific ETFs that have like that ESG flag on it to say that they're doing good things within that ESG movement. And obviously just keeping up in the news with what the companies you're investing in are doing is really, really important.
Yeah. And then, so at the moment, I've just invested a set amount. Should I go big and invest way more, or do I start small? I can't decide what to do, basically.
From what you've said, that's a great start. So having a Stocks and Shares ISA is that tax efficient way to invest because you can have what's known as a general investment account. And that means you can invest in both of them, but the Stocks and Share ISA has the tax wrapper, which means you can put up to 20k a year per tax year into the Stocks and Shares ISA. And any dividend, capital gains, any income you make within the ISA is completely tax-free, which is the beauty of it. Because you've already paid your tax on your income, they're trying not to tax you again. But if it's within the general investment account, you can be liable for tax if it goes over your allowances.
Okay, that's interesting to know. I was gonna ask what the difference was between the two, so that's interesting. So since opening my Stocks and Shares ISA, I feel the need to constantly be checking to see whether it's going up, it's going down. I feel like that's not the way you should do it, right? And investing is for the long term.
Yeah, it's quite anxiety inducing to check every single day, if not every hour, because what you might have is obviously macroeconomic factors that will affect the market throughout the day. There can be tradings that are happening throughout the day that might affect what's going on in your portfolio. And if you looked at your portfolio yesterday and it was £100 and then you look today and it's 97, the mentality is to often think, oh my God, I've lost money.
Yeah.
Well, not until you realise that loss have you actually lost money, because it's time in the market, not trying to time the market. And so it's that small and steady. And with Invest Engine, you can actually invest £20 a month if you want to, or £20 a week, and create that habit to do little and often to build that up. But of course, if you had a lump sum you wanted to put in just to start, you could. And there's no restrictions on that. But often, to kind of reduce the anxiety, I would say, put in little and often so you don't really notice it, and then you can start to increase that over time.
Okay. So say every month I want to just add a little bit into my account. What is the minimum that you can add in?
The minimum is £20 a month, but obviously you can increase that over time. If, for instance, your income changes and you want to increase the amounts you put in, you can just set that up, and you can have it set up so that you make the decision as to where it goes or it gets invested on your behalf. Okay. It's so easy, and also everyone's looking for those short-term wins, especially the next generation, young people. They kind of have this short-term mindset where they want to get rich quick, and actually it does take time. You're building wealth. That is effectively what investing is. You're building your wealth, and you can get there quicker by doing certain things, but actually it's about monitoring your portfolio and keeping time in the market. Never invest money that you need in like the next year, because you just can't trust that the market is going to do exactly what you want it to do, which is to grow. Yeah. But what you can trust is that over time, given a certain length of time, if you're invested in the right index funds, you are going to see growth.
Yeah.
But it's just timing. Like, you have to stay in the market, you have to give time to it, and also not be someone that's going to kind of dip in and out of it, I think is really important as well.
Okay. So I always thought that investing was for the super wealthy and that it was super complicated, but I've realised recently that it's not, and I don't think a lot of other people realise that either.
It used to be, yes, because obviously you might have had to have had someone else involved to invest in certain companies. However, now you can download the Invest Engine app, let's say, you can open your stocks and shares ISA almost instantly, you can put in as little as £20 a week if you want, or even £20 a month, and start to buy ETFs instantly, very small amount of money. It's so rapid, and it's a really good user experience, which means it's open to a lot more people. So with Invest Engine, there is no stocks and shares ISA fee. Okay. Other platforms obviously might, and that can actually cause a huge dent in your investment portfolio. If you do want it managed, the Invest Engine management fee is a 0.25%, which can obviously take a lot of that pressure off of you. Yeah. But also worth looking at is fees within the platform. So when you're buying and selling your investments as well, it's really important to look at all of those fees that come along the way, because they can impact the value of your investment over time. So Lou, what actually made you start investing?
Well, I've been wanting to get into investing for ages, but like I said, I was put off because I thought you had to have like millions in the bank. I thought it was going to cost me so much money. So I did a bit of research, and I was just absolutely baffled by all the acronyms, like had no clue what anything meant. And then obviously came across your page, and I was like, okay, you make investing very simple. And it made me realise that actually you can invest with such a small amount, and like you say, there's no fees, it's super easy to get started, it's super accessible for anybody, and it's so important. I don't think a lot of people really know how important investing is, and I think a lot of people probably under the same kind of misconception as me, thinking you have to invest millions and that's the only way you can get into it, but that's not the case. So I thought I'd get started. And one thing as well is, I didn't realise until maybe a year or so ago, is that your pensions are actually investments as well. So that's something that I've been looking at on the side. So
yeah, because obviously with Invest Engine you can have a stocks and shares ISA, but you can also have a SIP, which is self-invested personal pension. Another acronym, drives me mad, there's too many. But anyway, when it comes to the SIP, obviously you can self-invest your pension, so you can be investing in what you want for the future. And I think it is really important, because if you're someone that, for instance, like you've told me before, comes from a corporate background where you've always had workplace pensions sorted out for you, SIPs can be a really kind of new way to think about your pensions for your future. Because whilst we think about investments in your stocks and shares ISA as wealth for your future, SIPs are very much for future you, and obviously come in as a pension as well.
I've got loads of workplace pensions because I've worked at various companies over the past 10 years. Can I consolidate those into a SIP?
Yes. So you can consolidate all your pensions into one, and then you can obviously transfer those into a self-invested personal pension that you look after. That obviously has to be done by you, or you can obviously get support. But yeah, the SIP is there and it turns into a self-invested. So all that kind of accumulation you've made in your workplace pensions where you and your employer contributed can all be bunched up into one and then put into a SIP.
Oh, amazing. So say I put the whole £20,000 into my stocks and shares ISA, I obviously stopped benefiting from the tax relief. Would you then open a general investment account? Is that the way you typically go?
In terms of ways to build your wealth, I would look at, for instance, so if you've maxed out your 20k in your stocks and shares ISA, and don't forget that 20k ISA allowance goes across all your ISAs. So if you've used any in any other ISA, that reduces the amount you've got left to your stocks and shares. But that 20k, then I would move on to possibly thinking about your SIP, so your pension, what can you be contributing there if you're not already? And then general investments accounts are really good places to invest as well. Just be cautious of your allowances there, because you do have dividend allowances and capital gains allowances. So that means, for instance, if you bought a share for £100 and you sold it next year for 150, you've made a capital gain of £50. And if all those gains added up fell over the capital gains allowance in this tax year, you would be liable for tax. But it can be a really good place, like you said, to just increase that amount that you're investing, especially if you're getting into it and you're enjoying it.